Hello, my name is Sarah Wheeler and I'm the head of the Anti-Money Laundering Division at the Cayman Islands Monetary Authority, and I'd like to deliver a short presentation today about the recent risk assessment conducted by the authority into the Securities Investment Business Licensees, or the SIB licensees. So this presentation is going to cover a number of areas connected with the authority's preparation of this risk assessment for SIB licensees. First of all, we'll have a quick look at the purpose of the risk assessment and the methodology that underpinned it. Then we'll look at the definition of SIB licensees and the combined sectoral risk assessment that was published by the authority. Then we'll move on to a more nuanced look at the inherent risk summary in the SIB licensee risk assessment, breaking that down to nature, size and complexity, clients and customers, transactions, products and services, delivery and distribution channels, geography, and then look at some key takeaways from those conclusions as to how you, as financial services providers, can really enhance your risk-based approach to managing money laundering and terrorist financing risk. Finally, we'll refer you to some additional sources of information. So what was the purpose of this SIBL licensee risk assessment? Well, the first was to enable us as a jurisdiction to better identify and assess our money laundering and terrorist financing risks. And it was also to enable us to evaluate those risks. But this application is not necessarily just for us as a jurisdiction or even us as a supervisor, but actually for every single financial institution that may operate in this sector. So I will briefly describe the risk assessment methodology that was used by the authority in conducting this risk assessment of SIB licensees. Essentially, these are inherent risk factor ratings, so that is the inherent risk present before mitigating factors such as controls and supervision come into play. And those inherent risk factors are derived from 5 different categories: nature, size and complexity, so the structural risks, transactions, products and services, delivery and distribution channels, clients and customers, and underpinning each of those 4, geographical risks, so your exposure to high-risk jurisdictions. I'll come on to explain each of those in a little bit more detail, but fundamentally, all of those individual risks were aggregated to come up with the overall inherent risk scoring of medium-high. Schedule 1 of the SIBL 2020 revision captures those persons who are deemed to be conducting SIBL activities. Securities investment business, as defined, includes shares and stocks of any kind in the share capital of a company, debentures, debenture stocks, loan stocks, bonds, etc., warrants and other instruments which confer contractual or property rights, options on any security or any currency, precious metal, or even an option on an option, futures, and rights under contracts for differences, so cash-settled derivatives. So that covers a lot of business within the capital markets world. SIBL licensees are authorised by SEMA, and they will include people who are engaged in market making, dealing in securities, arranging deals in securities, advising on securities and managing securities. So as I said, covers a wide range of activities in a large capital market sector. And it's important to note here that this particular risk assessment on the SIB licensees was part of a broader set of risk assessments that were conducted of all the sectors that SEMA supervises, and a summary of all those risk ratings was published on our website on the 13th of March, and that includes an assessment for banks, money services businesses, trust and corporate service providers, insurance, mutual fund administrators, SIBL licensees, and the unregulated or formerly unregulated sector of SIBL EPs. And why was this risk assessment done at this time? You may recall that in 2015, the National Risk Assessment identified the need for enhanced supervision of SIB licensees, and the mutual evaluation conducted by the CFATF confirmed those findings. So in 2019, the authority undertook a comprehensive risk assessment for this sector. So in order to conduct a thorough risk assessment, a data collection exercise was conducted in the latter part of last year across SIB licensees, and that enabled the authority to really dig deep into the following categories: the size, nature and complexity, clients and customers, transactions, products and services, delivery and distribution channels, and of course geography, which, as I said before, underpins all of these elements. And here are the high-level conclusions that were drawn. So structural risks, nature, size and complexity, were considered medium-high. Client and customer risks, medium-high. Transaction, products and service risks, high. Delivery channel risks, medium-high. Geographic risks, medium-high. And that led to an overall risk rating of medium-high. And we'll come on to describe why particular areas were more high risk than others. So when considering the nature, size and complexity of the risks of the sector or the structural risks of the sector, the following factors were considered. The high value of assets under management, coupled with high volumes of transactions, the volume of international transactions, the number of customers, the lack of a physical presence in the Cayman Islands, whether the parent company, affiliates or subsidiaries were in higher risk jurisdictions, and the principal place of business being potentially in higher risk jurisdictions. So the assessment of the nature, size and complexity of this sector concluded that the international customer base was predominantly outside of the Cayman Islands. 98% of those were domiciled in countries with equivalent AML-CFT frameworks, so none of those being what we might describe as high-risk jurisdictions. 10% of licensees accounted for 79% of assets under administration, so a small number of licensees controlling a large proportion of the assets. And this accounted for only 0.3% of the total reported transactions. And it was concluded that SIB licensees engaged in securities arranging and advising were less risky than broker-dealers. So again, those who are arm's length on the sales side considered to be less risky than those who are actually dealing and transacting direct. The risk assessment then went on to consider client and customer risk, which was deemed to be medium-high. Now the key factors considered here were the type of clients and customers and the geographical location of those clients and customers as a percentage of the total. The conclusions drawn were that less than 1% of all customers were from higher risk jurisdictions and only 5% fell within the higher risk categories. 2% of the customer base fell within low risk categories. So 93% of customers, predominantly individuals, carried a medium inherent risk. It was also concluded that licensees cater to a wide range of customers. The next element considered were the transactions, products and service risks in the SIB licensee sector. Now this particular category was deemed high risk. And the factors considered here were the complexity, liquidity and volatility of the products offered, the types of services offered, and the forms of payment accepted. When looking at this sector and the transactions, products and service risks, it was deemed helpful to further break down some of these products to further nuance the risks associated with them. For example, there were some products that were certainly viewed as higher risk than others. Shares, options, futures and contracts. For differences, 100% of SIB licensees offer at least one of these products, and they can be distinguished against, say, for example, instruments creating or acknowledging indebtedness in titles to securities and certificates. Similarly, there were higher risk services. 86% of those SIB licensees engaged in broker dealing, market making, or securities managing. Alternatively, other services attracted lower risk, such as securities advising and securities arranging. Finally, there were higher risk forms of payment: physical cash, traveller's checks, bearer shares, prepaid cards, virtual currencies, or third-party payments. So the overall conclusion for the transaction, product and service risks was that there is a high risk that these could be vulnerable to money laundering. And that was on the basis of the fact that there were a large number of transactions, so between 1st of July 2018 to 30th of June 2019, over 6 million transactions, and that 86% of SIB licensees were engaging in higher risk activities. A further 38% of SIB licensees outsourced their trades to trading and liquidity platform, and 10% engaged in unregulated trading or liquidity platforms. So taking all these factors into account, the conclusion was that there was a high risk in this sector. Finally, the risk assessment looked at delivery and distribution risks, which were deemed medium-high. Factors considered here were the client-customer onboarding process, so was it face-to-face or not face-to-face, the use of intermediaries, eligible introducers, and/or reliance on third parties, and the acceptance of customers via the use of online platform, all of which can create additional delivery risk. And the data showed that 17% of SIB licensees will accept customers via online platforms, and they're mainly broker-dealers or market makers, which, as we know, are higher risk activities. 11% of customers are from jurisdictions that are higher risk, but no SIB licensees accepted physical cash, traveller's checks, bearer shares, or virtual currencies. 10% of SIB licensees would accept prepaid cards, and 14% accepted third-party payments, which are higher risk payment channels. And underpinning all of these inherent risk factors are the geographic risks, which were deemed medium-high. So geographic risks pertain to the numbers of clients and customers based in or controlled or owned by persons in high-risk jurisdictions, transactions coming from or going to high-risk jurisdictions, and the large international client or customer base. The overall conclusion here were that a large number, 69% of SIB licensees, have multi-jurisdictional ownership structures, which in itself creates the potential for risk. The majority of customers were in non-high-risk jurisdictions, however, but there was a wide geographic dispersion of customers, which again in itself does increase money laundering, terrorist financing risk. So looking at all these factors together, the overall risk assessment for geographic risk was deemed medium-high. So that provides you with a short synopsis of how the risk assessment was conducted and the individual components and conclusions. The overall risk was deemed medium-high. So how can entities use that to further enhance and support effective risk-based approach to managing money laundering risk? Well, entities should consider, given the high risk associated with products, transactions and services, how exposed they are to some of the following products and services. So highly complex or volatile securities investment business products, cross-border international transactions, or whether they transact with PEPs, non-profit organisations, corporate trust nominees, special purpose vehicles, high net worth individuals or corporates, sophisticated persons or multi-ownership structures. This should all be factored in to their institutional risk assessments. Another takeaway would be that given the medium-high risks identified with delivery channels and the proportion of entities that did use online platforms and non-face-to-face interaction, all entities should closely monitor the use of online platforms, third-party payments, non-face-to-face or no direct customer interaction, and under all circumstances conducting business with persons in high-risk jurisdictions. So financial services providers can use these takeaways as part of their effective risk-based approach to management and mitigation of money laundering risk. And that has really 4 elements to it: identification and assessment of the risk, and that's where these findings of this risk assessment can be so useful. Then managing and mitigating those risks, so applying the appropriate measures required, and that may be through transaction screening, through your compliance programs, through education, and of course through appropriate and robust ongoing monitoring. As part of that ongoing monitoring, you would need policies, procedures and IT systems to support whatever strategy you put in place, and it's very important that all of the above is documented clearly and regularly updated to reflect reviews, assessment and senior management approval. So you may be interested in finding out more about the data and the methodology that went into conducting this risk assessment, and there are a number of sources to which you can refer. The combined sectoral risk rating published by the authority in March has a detailed account of how we came to this conclusion on the SIB licensees, but also has our risk assessments across every sector, which may also be of relevance to you and your customers. There is additional training on the risk-based approach online. We've also got lists of sanctions online, the Basel AML Index online, and of course numerous FATF publications which may be of relevance to you and your risk-based approach. Finally, the authority has published a number of guidance notes about how best your money laundering obligation should be interpreted by reference to the anti-money laundering regulations published in the Cayman Islands. So thank you very much for listening. We do hope this has been of use. If you have any further questions or queries, please do not hesitate to get in touch at contact@amlcft@cema.ky.